Welcome. I'm Sean Matteson, licensed insurance agent since 2006. Today, we're answering one of the first questions anyone asks when they start looking at final expense insurance. How much is this going to cost me? It's a fair question, and the honest answer is that the cost varies based on factors that are specific to you, your age, your health history, how much coverage you want, and the type of policy that you choose. What I want to do in this presentation is give you a clear framework for understanding what drives the cost, what realistic premium ranges look like at different ages, and how to think about whether the coverage makes sense for your situation. By the end of this, you'll have a much clearer picture of what to expect, and you'll be in a better position to have a productive conversation with an agent. The reason you can't just Google how much does final expense insurance cost and get a reliable number is that final expense insurance isn't a fixed price product. It's priced individually. The carrier looks at who you are, your age, your health, and prices the coverage accordingly. Two people sitting in the same room, same coverage amount, can pay very different premiums. That's not unique to final expense insurance. That's how life insurance pricing works across the board. But it does mean that any number you hear without context is incomplete. What matters is understanding what moves the needle and why. There are four things that determine what you'll pay. Understanding all four is the only way to get a number that actually means something for your situation. The first is age. Final expense insurance is priced based on your age at the time of application. The older you are when you apply, the higher your premium for the same coverage amount. This is the single biggest driver of cost, and it's the one variable that only moves in one direction over time. The second is health history. Your health at the time of application determines which type of policy you qualify for, simplified issue or guaranteed issue, and that distinction has a significant impact on what you pay. Better health generally means better pricing. The third is coverage amount. More coverage costs more. The question is matching the coverage to your actual goals. What does this money need to do when it's paid out? The fourth is policy type. Simplified issue policies, which involve health questions, typically cost less than guaranteed issue, which accepts anyone regardless of health. The difference in pricing between those two paths can be meaningful. Age is the most predictable cost driver in final expense insurance. Carriers price coverage based on actuarial tables, statistical models of life expectancy, and older applicants pay more for the same coverage because statistically the benefit is more likely to be paid sooner. Here's what this means in practical terms. Every year you wait to purchase, the premium for the same coverage amount increases. That increase isn't dramatic year to year, but it compounds. A policy you could have gotten at 65 for $50 a month might cost 70 at 70 and 95 or more at 75. The other important thing to understand is that your premium locks in at whatever age you are when the policy is issued. It does not go up as you get older. What you pay at 68 is what you'll pay at 88, as long as you keep the policy in force. That locked premium is one of the most valuable features of this coverage, and it's one of the clearest arguments for not waiting. For adults in the 50 to 65 age range applying for final expense coverage, here's a general picture of what simplified issue premiums look like for a $10,000 policy. These are illustrative ranges. Actual premiums depend on carrier, health, and state. At age 50, many applicants in reasonable health are looking at $25 to $40 per month for $10,000 in coverage. At 55, that range typically moves to $30 to $50. At 60, it's commonly $35 to $60, and by 65, premiums for the same coverage are often in the $45 to $70 range. For $25,000 in coverage, multiply those ranges roughly by 2.5. These are approximations. The point isn't to give you a quote, it's to give you a realistic landscape before you start shopping. For applicants between 66 and 85, the ranges move up meaningfully, and the gap between simplified issue and guaranteed issue pricing becomes more significant. Under a simplified issue, a 70-year-old might pay $60 to $85 per month for $10,000 in coverage. At 75, that same coverage is often $80 to $110 or more. At 80, premiums can run $110 to $150 or higher, depending on the carrier and the health picture. Guaranteed issue policies, which carry no health questions, come at a premium above those ranges, along with a graded benefit period in the early years. The right path depends entirely on your health history, which is why working with an agent who can shop both options matters. You may qualify for better pricing than you expect. Coverage amount is the most straightforward variable in this equation. More coverage costs more. The relationship is essentially linear. What makes it worth thinking through carefully is making sure the number you choose actually matches what you're trying to accomplish. The conversation about coverage amount starts with a simple question. What does this money need to do? For many people, the primary goal is covering funeral and burial costs so their family isn't left with that expense. A basic funeral in the United States can run $8,000 to $12,000 or more depending on location and services. A policy in the $10,000 to $15,000 range covers that goal in most markets with some buffer. For others, the goal includes paying off a small balance, a credit card, a car note, so nothing gets passed along to a spouse or children. That adds to the coverage need. And for some, there's a legacy component, leaving something meaningful to a child or grandchild or covering final medical bills. That pushes the number even higher. The right coverage amount is one that covers your specific goals at a premium you can sustain long term without strain. The type of policy you qualify for has one of the biggest impacts on your premium. Simplified issue requires answering health questions, typically 10 to 20 questions with no medical exam. If your health history allows you to answer those questions favorably, you generally get better pricing and often no graded benefit period. Coverage is in full force from day one in most cases. Guaranteed issue asks no health questions. Anyone within the eligible age range qualifies. The trade-offs are higher premiums for the same coverage amount, lower maximum coverage limits, and a graded benefit period, typically 2 years, during which the full benefit isn't paid for natural causes. The practical implication, if you qualify for simplified issue, that's almost always the better option on price. The job of a good independent agent is to shop both paths on your behalf and bring you the best fit. Many people assume they'll need guaranteed issue because of their health history and are surprised to find they qualify for simplified issue pricing. Health history affects your premium in two distinct ways. First, it determines which type of policy you can access, and as we just covered, that has a significant impact on what you pay. Second, within simplified issue underwriting, health history affects the rate tier you're placed in. Most final expense carriers use a handful of underwriting categories, something like preferred, standard, and rated, and your health profile determines which category you fall into. A preferred rate can be meaningfully lower than a standard rate for the same coverage amount. What matters most is the specifics. When a condition was diagnosed, whether it's currently managed, what medications you're on, and whether there have been recent hospitalizations all factor in differently depending on the carrier. This is one of the reasons that working with an independent agent who knows multiple carriers matters. What disqualifies you at one carrier may be perfectly acceptable at another. At some point, any honest conversation about final expense insurance has to address the question of value. Is this worth what it costs? That's a reasonable thing to ask, and it deserves a direct answer. The way to evaluate whether final expense insurance makes sense is to think about what the alternative looks like. If there's no coverage in place when a death occurs, someone absorbs the cost. Sometimes it's a surviving spouse who didn't expect that expense. Sometimes it's adult children splitting a bill that arrives during the hardest week of their lives. Sometimes it goes on a credit card. The expense doesn't disappear, it just falls on whoever is left. The question isn't whether final expense costs money. It does. The question is whether paying a predictable monthly premium over time is a better outcome than leaving an unpredictable lump sum cost for your family. A $10,000 death benefit paid to your family without leaving them having to come up with that money out of pocket is the practical value that this coverage delivers. The right framing isn't, can I afford the premium? It's, what is the real cost of not having this in place? We talked about how age affects premium. Here's what that looks like in dollar terms over time. A 65-year-old who purchases a $10,000 policy at $50 a month has a premium that's locked in for life. A 75-year-old purchasing the same $10,000 policy might pay $100 per month, double the rate. Every year they waited between 65 and 75, they were paying a higher rate without any coverage in force. The person who acts at 65 gets a decade of coverage. The person who waits until 75 never had. That's the real cost of waiting, not just the higher premium, but the years without protection that can't be recovered. Every year you wait, the same coverage costs more. It's not a sales line, it's the arithmetic of how life insurance is priced. And unlike most financial decisions, you can't go back and buy last year's rate. A $10,000 policy at age 65 is approximately $45 to $70 a month. The same policy at 70, approximately $60 to $90, and at 75, $85 to $115 or more. Those ranges shift based on health and carrier, but the direction never changes. The premium you lock in today is the premium you'll pay for life. The premium you lock in a year from now will be higher, and if your health changes between now and then, the type of policy available to you may change as well. Everything covered in this presentation reflects general characteristics of how final expense insurance works, not any specific product or carrier. Actual premiums depend on your age, your health history, the state you live in, and the carriers available to you. Premium ranges used in this presentation are illustrative approximations. Your actual quote will vary. The right way to know what your options look like is to work with an independent agent who can run quotes across multiple carriers and bring you the best fit for your situation. A prior decline doesn't mean coverage isn't available. Guaranteed issue exists specifically for situations where simplified issue isn't an option. And many people who assume they'll need guaranteed issue qualified for simplified issue pricing when someone actually shops on their behalf. If you want to know what your actual options look like, not general ranges, but a real quote based on your age and health, I'm happy to run that for you. I work with the top carriers in the final expense space. I've been doing this since 2006, and I'll be here when you need me. Text FEX to 702-605-6038, and I'll follow up personally. Your situation is unique, and your personal strategy matters. I hope this video was helpful. This stuff really matters for your future, and I want to make sure you get it right. Hit subscribe, check out these videos right here, and if you have any other questions, just text LIFE to 702-605-6038. I've also linked a lot of resources in the video description and other ways you can get a hold of me.